Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 3rd of December 2019. So, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. So, hopefully, my technical issues will be slightly better slightly on the better side, I would say it like that, because yesterday I did have a few problems, so I do apologize for the quality of the video yesterday. Of course, the live stream I'm talking about, the recording was okay, but the live stream somehow struggled a little bit. But so, like I said, I hope today's video is going to be better. Now, as always, guys, before we jump into the charts, first we need to have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our research page, which we update on a daily basis. So I believe you can find a lot of useful stuff here for yourself. So yep, feel free to visit us on jfdbank.com and click on the research tab right here. Right, for now, let's jump into the charts. Now the first one I want to touch on here is the DAX. So the German index yesterday took a dive together with the rest of the equity markets. Now, of course, all this kind of came on concerns that Trump is ready to impose some tariffs again, and this is what I kept talking about, guys, for quite a while, and probably you know it yourself as well, is because every single time when we do have some positive news on the on trade wars, then the market, of course, starts rising and nicely. But then a few days later, we see a setback here, and some negative news comes out that the U.S. are ready to impose some more tariffs, and this is what we get. This is what, and of course, all this kind of also kind of came in line with the worse than expected ISM manufacturing numbers from the United States. So basically, the number remains in contraction territory, so also not good for the market. And you can see that this is the result of all these bad news yesterday, and we saw the strong slide here, so forcing the European session to close was strongly in the red, the US session as well. So for now, looking at this technical picture here on the DAX, yesterday I talked about this one, and I was telling you guys, if we get a nice close below the 13,044 mark, this in a way increases the chances of a further move lower. Now, currently we can see that the cash index is trading roughly around the psychological 13,000 level. In a way, if it pushes a little bit higher but fails to move above this 13,044 mark, we could see another round of selling, and potentially then we could target the 12,795 mark, which is the low of the 31st of October. Around here, it could also test the 200 EMA here on the 4-hour chart, which could in a way also provide a bit of support. But if it overshoots it, as it did here, you can see it may test this upside line, from which then it could rebound and maybe go for a bit of correction here. So overall, don't get me wrong, overall, as long as we remain above this upside line, still the overall trend is more to the upside than the downside. But again, we'll be very careful, very cautious near this upside line, and let's see if it actually can hold this time. If it doesn't, then this is where it could turn out to be ugly for the index. In terms of the upside here, now in case suddenly the news start coming out in regards to the trade wars that no everything's fine, no tariffs, and or let's say that they're working towards the achieving an agreement and stuff like that, so which we've seen that happening already, and the market could revive itself, could travel higher, but looking at this picture from the technical perspective, if we get a push back above this little level right here near the 13,165 mark, roughly around here, if we get a push above this is the low of the 29th of November, then we will aim for slightly higher levels, and by higher levels we'll initially target only the 13,374-75 mark, and then we'll take it from there, guys. For now, everything's kind of leaning more towards the downside, but again, that's in the situation if it stays below the 13,044 mark. If it travels slightly above it but stays still below the 13,165, this little territory for us is somewhat of a neutral one. So let's keep an eye on this one. Silver, I haven't looked at this one for quite a while, and just wanted to quickly run it by you. And last time I talked about this one, I was mentioning, guys, a nice rising channel pattern. You can see that the rising channel got violated, but what I was also saying, that in order to get comfortable with the downside, a drop below the 16.79 level would be needed. So the pair came close yesterday of testing that level again, but as you can see, this level here, this key area of support near the 16.79 level held the price nicely. We can actually get rid of these lines here, this rising channel, and we can now focus mainly on some of these support and resistance levels. Now, I'll look at this one from the very short-term perspective, because again, overall, we are still within this downtrend. We're still trading below this downside resistance line taken from the high of the 4th of September. I do understand it's a bit of a tentative one. We only have 2 touches, but still kind of something to consider, guys. And in a way, if I'll zoom in here a little bit, so we can see that the commodity is still struggling to overcome this barrier. So this is going to be the level for us in order to consider the downside. And if we do get a drop below this, then this one right here, then yes, this would confirm a forthcoming lower low here on the shorter time frame, and we could start aiming maybe for the 16.62 or maybe a little bit below that. But initially, our target is going to be the 16.62. If this decides to push higher, now in order to consider some higher levels, at least in the short run here, first of all, let's mark this little downside resistance line here, or in a way, actually, let me just reiterate that a little bit. This is going to be, because this is slightly more flattish, and in a way could present itself as a bigger obstacle. So if we get a push above this downside line, then yes, we could see maybe this one maybe opening the path for itself towards slightly higher levels, but the only thing is that we would need to see first this barrier being broken, the 17.04 level. That's the high of last Friday, and if we get a push above that, then yes, there is another obstacle to consider, which is the 17.11 mark, which is the high of the 26th of November, and of course then we will aim for this little high here near the 17.20 mark, which in a way you can see that acted as a very nice area of resistance here back on the 20th of November and the 22nd of November. And probably by the time, let's say, it could travel higher here, it may test the 200 EMA on the 4-hour chart. So again, good area for resistance, but in order to consider a possible move towards this area, we need to see a break of the 17.04 level first. Jumping into DXY very quickly, I'm not going to spend too much time on it. Just wanted to quickly update you on this one. So last week I talked a lot about this one, and basically I was saying that if we get a nice good close above this 98.45, we will start aiming higher. But as you can see, we didn't get the close. Instead, the dollar index drifted lower, broke this upside line, broke our key support zone near the 98 mark, and drifted further south. So in a way, maybe we could see a bit of correction here. The only thing is that you can see that the bears are really trying hard to push this one lower. So that's why how you could play this one out is probably being very careful and wait for a drop below the low of yesterday, and that's roughly near the 48 point. Sorry. 97, sorry, 97. Why did I have 40, 97.80 zone? So if we do get a drop below this, then yes, we will aim for slightly lower areas. Now, don't get me wrong, we are approaching this key area of support here near the 97.70 zone. That's the low of the 18th of November, and in a way, we could see something like this happening initially. Maybe the index would decide to go for maybe a small correction to the upside, but for now, keep your eyes on this one, guys. Like I said, it may correct a little bit higher here, but to be honest, until it's kind of trading in this little territory here, we're going to remain neutral, because in a way it also has a good chance to push higher, maybe then test this area right here near the 98 zone and then reverse to the downside. Or in a way, again, we've seen this happening several times where it's just not going to go for the retracement straight away. It's just going to start dropping, breaks the yesterday's low, and drifts a little bit lower. So that's why for now, we're considering this possible scenario here as a main one. In terms of the upside, if you want to consider higher areas, yes, the 98.45 level still remains the important one, but probably from the slightly shorter term perspective, the 98.17 mark, if we get a push above this, this would also place the price back above the 200 EMA, back above the upside line, and then yes, we could see this one drifting a little bit higher. So for now, keep your eyes on this one, and let's see how this is going to play out. AUDUSD, so fantastic move higher. Of course, this yesterday it started jumping higher, it started breaking. This is what I talked about yesterday in my morning video, what I was telling you guys to keep an eye on this falling wedge, because we did get a break of that wedge, but the important level to watch was this 0.6780, which was taken out wonderfully, and we saw a move higher. Initially, my target was around the 200 EMA, but I didn't quite expect that it's going to be that strong. So it managed to reach our other target, the 0.6835 mark, which also got overtaken here. And you can see that the pair is still, it seems that it still wants to climb higher. Don't get me wrong, at some point we will have a small correction lower here. So in a way, what you could and how you could play this one out, so we could see maybe a correction lower here at some point, and of course the main barrier, the first barrier to watch will be the 0.6835. but if this is just a temporary obstacle here for this pair, the area where we could see the bull stepping in again, it could be near this inside swing high here of yesterday, near the 0.6826 mark, and then we could see something like this happening. So for now, guys, yes, we could aim for a little bit higher here. In a way, the pair could maybe drift towards this little area right here near the 0.6857, but again, it's a bit of a speculation here, because we are quite overextended here to the upside on a shorter time frame, so a bit of correction could be possible, and then before another leg of buying. In terms of the downside, to consider lower areas, a drop below this little low here near the 0.6810 11 zone. This is what we would need to see in order to consider slightly lower areas. So let's keep an eye on this one, guys, and let's see how this is going to play out. For now, everything's kind of leaning more towards the upside, but a bit of correction could be possible as well. Of course, we did get the RBA policy statement this morning, so of course the announcement from RBA of their interest rate, and that stayed the same, so that kind of fueled a little bit the market here of the Australian dollar. Yep, but for now, again, don't get me wrong, we may see a bit of correction before another leg of buying. AUDCAD, so something also that's skyrocketing, and also I was looking at the higher levels here, but I didn't quite expect it to push that strongly to the upside. So perfect perfect break of some of our key resistance levels. You can see that the pair also managed to reach this area. This is where the pair got held. That's roughly near the 0.9110 zone. Now the big question here is, can it retrace a little bit lower and then maybe push higher again? Ideally, we would like to see some retracement, but let's of course not over speculate on this one too much. We do have another area of resistance which is slightly higher here near the 0.9120 zone, so that just fell shy of 10 pips of reaching it. So in a way, yeah, we could see maybe a bit of correction here and then a push higher, but we'll be very careful near this key area of resistance between the 0.9110 and the 0.9120 zone, because in a way it would be quite interesting to see if it can hold or not. If it cannot, then yep, higher levels could be met. But for now, given the sharp uprise that we had, we are aiming for a small correction. Not much. Again, we'll be very careful here because the upside momentum is quite strong. But on the other hand, some might say that maybe we're actually too strong here. So that's why we could see maybe a deeper decline. So again, consider a possible correction, but again, be very careful, guys. Don't overdo it, because in a way, and this is something how you could also try to protect yourself. And let me quickly grab one of these. Where is that? There we go. So the Fibonacci retracement, guys, sometimes it helps in these situations, and basically how you could play this one out is something like this. So in a way, the first main target, it could be around the 23.6% retracement on the Fibonacci, and that's roughly near the 0.9076. Now I get that is a lot, but still we could see this one, or in a way it may fail to move that higher. It may fail to move lower, but it may instead move higher a little bit, maybe test the 0.9120 zone and then retrace, basically. So again, it's a very tricky one, guys, for now. Of course, well, not personally, I wouldn't say personally, but for now we are looking for maybe for a bit of correction at some point here, but we'll be very careful with the downside because, like I said, the upside momentum is quite strong right now. So let's keep an eye on this one. USDJPY. So of course, logically, the yen buying increased yesterday. The markets were selling off, so everybody was started jumping into safe havens. Yen is of course one of those. We saw a nice slide here after finding resistance near this level right here on yesterday, and that was near the 109.73 zone. And then the pair strongly broke to the downside here. You can see that it took off, it broke this key area of support near the 109.37 and then drifted lower. So this morning the pair already found resistance near its pivot, roughly around the 109.21 zone. The big question here is, can this drift further down? If the risk-off sentiment continues to be present, then yes, we could see this one drifting further south. And but in a way, how we could protect ourselves here, just to be on the safe side, wait for a drop below the 108.89 and then aim for lower areas, because until then, all this area could be a bit of a tricky one, guys. We could see this one going a little bit lower and then reversing back to the upside. We've seen this happening many times, so that's why be very careful. If we get a push above the 109.21, yes, we will start considering slightly higher levels. We will aim for in the 109.37 level first, and if that gets broken, then yes, we could even see a move back up here all the way back towards the 109.79. But 109.73. But for now, at this point in time, everything's kind of leaning more toward the downside. But in order to get comfortable with the downside, a drop below the 108.89 level is needed. GBPUSD. So pushing out nicely to the upside. This is what I talked about yesterday in my Traders Tea Time, and I was telling you guys to keep an eye on these two lines because the pair is coiling up, and you can see that the pair is trying to make its way higher. Now, the big question here is, can it actually push further north, and can it overcome this barrier right here near the 1.2951 zone? So if we do see a push above this, wonderful for the bulls. We could target then maybe slightly higher levels. Maybe we'll aim for the 1.2985 then, and or even we could target the highest point of October near the 1.3013. For now, like I said, it's leaning more towards the upside, but we need to see a nice good clear break. And if we do actually see a break, wait for a 4-hour candle close above this 1.2951, because if the 4-hour candle struggles to close above this level, then there's something wrong here. Not everything's kind of looking quite that positive probably. So, but if we do get a nice close of a 4-hour candle, then we'll consider higher levels. But of course, we'll still remain very careful. We'll have a tight stop loss here, but again, it could increase the chances of a further drift higher. So for now, all eyes are on this 1.2950-51 zone. Let's see how this is going to play out. In terms of the downside, pretty straightforward. We need to see a break of this upside line before we could consider lower areas. And one of the areas to keep an eye on, for example, maybe for today, could be around the 1.2928 zone, somewhere roughly around here. But again, like I said, be very careful. Keep your eyes on this upside line as well. And the last pair for the session is going to be euro dollar. Now, this is the wonderful move that I talked about yesterday. Now, what I was saying yesterday, that we needed to see a nice good push above the 1.1043 in order to consider higher levels. Boom, we got our move. We got our almost managed to get our test of the 1.1093 level. And now the big question here is, can it continue pushing further north? Can we overcome this 1.1093 level? For now, looking at this picture here, we could probably consider this as a possible bullish flag. Now, if it is something like that, then yes, of course, this increases the chances of a further move higher. The only thing is that we're going to take a very conservative approach here, and we're going to wait this one out and wait for a a push above the 1.1093 level. Ideally, again, also a nice close of a 4-hour candle would be great to see, because we don't want to see the same scenario here as we had on the 21st of November. So wait for that close of a 4-hour candle above this, and then yes, we could start targeting, considering higher levels again. So everything's kind of leaning more towards the upside right now. We did have a fantastic push yesterday through this level that I talked about, the 1.1043. We broke the 200 EMA on the 4-hour chart, and yes, in a way, it could travel further north, but we need to see a break above this. The reason why we need to see a nice good break and a close above this level is because, in a way, if it starts getting a hold up here and starts reversing back to the downside, we could be getting ourselves a wide range here. So something not to ignore, guys, because this in a way could maintain the price action here for quite a while. And but that's, of course, that could come if we see a hold up near this 1.1093 level. So that's why, guys, be very careful and wait for a close above this area first before getting excited with the upside. For now, in terms of the downside, well, it's probably straightforward. We're gonna wait for a drop below the 200 EMA and then the 1.1043 level in order to aim for the downside again. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my Traders Tea Time, as always, that's 14:15 GMT. We'll have a look at some of these instruments as well, and we'll have a look at some new ones. And yeah, as always, guys, be very careful. It's an interesting day today. So yep, keep your eyes on the economic calendar, and yep, keep your eyes on the price action, and have your stop losses in place, and be very careful. It's the holiday season, so let's not blow up those accounts, and be very careful, guys. Yep, as I said, be very careful. Thank you very much, guys, and I'll see you later. Bye bye.